Welcome to The World According to Craig, and on this week's episode, we try to make sense of nonsense, also known as the stock market. And maybe we will, maybe we won't, but at least we might be a little bit more informed at the end of it. Thank you for joining me, Pete, to talk about everybody's favorite and least favorite topic, or their favorite thing they love to hate, which is the stock market. So we're going to talk a little bit today about what people can think or should know in this situation. But first, I want them to understand who you are, because you're not some evil finance manipulator. Or maybe you are. Sure? So you're a hedge fund trader or a hedge fund person, right?
Yes, I work at a hedge fund where I conduct research on stocks.
Got it.
Yep.
So there are like 8 questions buried in that, but like, how did you get, what is a hedge fund? Because I think there's a lot of headlines about it and people don't really understand it.
Okay. So a hedge fund is simply, we raise capital from third-party investors who we then charge fees to, and we take that capital and invest it in the stock market. We call it a hedge fund because we not only buy stocks, but our mandate is that we can also short stocks. And what shorting stocks means is that we are betting against the company's stock price.
Got it. And so there are a lot of people who think that, based on recent headlines and GameStop, people are like, evil traders shorting a stock, as if it's some sort of like emotional investment in a stock, but it's not. We all, like, if I were watching, and I know I can say these things, but you can't. But if I were watching a stock and I were like, that company's not doing well, I wouldn't buy the stock, right? And so you're just saying, we also bet the company's not doing well. And so we're going to actually put money on that bet.
Exactly. And what that helps us do is that if the stocks that we own don't do well because either for company specific or sector specific or market specific reasons, it allows us to hedge that exposure.
Got it. So it's a little bit like saying, I'm going to put some money over here, I'm going to put some money over here, and this has a better chance of making money to offset if this doesn't.
Exactly.
Okay. So this seems very complex, and there's a lot of questions about this, but how did you even get into this? Like, were you the kid who stole all of the Monopoly money out of the box and then just sat with it and like counted it?
I was the best Monopoly player I know.
Okay. So how does becoming the best Monopoly player you know translate into like the world of finance? Because I grew up in rural Indiana where no one had any money.
Yep.
And there was like a storefront for the Edward Jones Investments. And that seemed very foreign to me. When I was young, I bought a share of McDonald's.
Yeah.
But like, I didn't understand what that was and what that meant. So like, you grew up in Minnesota. Did you understand what that was and what that meant at the time?
No, I actually really didn't. So I grew up in Minnesota. My dad and his 2 brothers are businessmen. They're entrepreneurs. So I was exposed to business at a young age. And there's something about it that I liked. To say it simply, I used to, as a kid, I grew very fond of money. And I don't know why. I just, for some reason, really loved it.
You just played with actual physical money?
No, just like wanting to make money. I always wanted to do that. Like,
I mean, yes.
But it was a passion of mine, and I don't know why.
Some kids played with chemistry sets. You played with a calculator.
Yeah, like I was always thinking about like, how do I make money?
Okay. I was thinking about how to blow up things with my chemistry set, and I did not become a chemist. At least you did something with your passion.
When I graduated high school and thinking about where to go to school, I like I said, my dad and his 2 brothers, they were businessmen. I wanted to do something business related. My brother was just joining Wall Street at the time, and so I decided that this makes like the most logical sense. And it was as simple as, how can I make the most money coming out of school?
Okay.
That's not how I feel now, but back then that was the driver.
Got it.
So when I was in college, I had an internship over one of my summers, and that was at a private equity fund, a small private equity fund in Minneapolis. And there, the focus is more on buying companies, making some changes, mostly improvements, and then selling them for a profit a little later.
So a private equity company is, there's like let's say a family owned operation that's managed to scale into like 15 grocery stores. but they still treat it as if it's one grocery store. So a private equity company might come in and offer that family money and then say, okay, well, we could create some efficiencies here. There could be like one person who handles all the buying for all 15 stores instead of 15 people and things like that. Is that accurate?
Yeah, exactly. And this specific fund that I worked for, that was more or less their business model.
Huh.
Yeah, so spot
Right on point.
Yeah,
Grocery stores.
there you go. And so over the summer, I made a decent amount of money, and following that, when I went back to school, I wasn't making money with my internship, and so I thought, how could I make more money? And so I started trading stocks. One of my roommates was one of those kids that had been trading since he came out the womb.
Oh,
and
wow.
So I was
That's an aggressive 2-year-old.
Yeah, exactly. So I was constantly talking to him, and I started doing my own research in college, and I was just managing my own small portfolio. And so when I left college, I knew that I'd really like doing that. And what I learned while I was managing my portfolio in college is that it actually became less about money. What I realized is that it became more about like solving a puzzle.
Okay.
There are all these different pieces that go into determining how much is a stock worth. And one of those drivers can be, what's the company's profit? But another driver could be, does the market like these type of stocks right now? A company could be meeting or exceeding all of its profit expectations, but if the market doesn't like the type of stock, then the stock might not go up.
Right.
An example of that would be, let's say a company like, and I'm just using this hypothetically, like a grocery store where the grocery store, the market might be expecting that the grocery store generates $100 of profit. The grocery store comes out and they make $200 of profit, but the stock doesn't go up. Well, one of the main reasons why the stock might not go up is because Amazon, Walmart, and all these other larger companies are dominating the grocery space. So people might think that this profit beat is only temporary.
Got it.
And so there are all these different factors that go into place that started to excite me more than actually making money.
Well, that's fascinating because I think that's the key component of this is we have this perception out in society, justified or unjustified, because I don't think there's like a trade organization for Wall Street that says we should work on our reputation. But we have this perception that there's a bunch of people just arbitrarily setting prices. But there are not a bunch of people arbitrarily setting prices. They're trying to make informed decisions because it's only to their advantage to make an informed decision if it makes them money, right? Like if you're making an uninformed decision and it's the wrong decision, you lose money.
Yeah.
And so we have this perception that these people are out for no good, but they're not. They're trying to make real informed decisions. And we'll get to this in a second, but the public is actually the one causing the problem in this, but in some ways. And so the question becomes, you're doing all this research and it's like, what is the profit? What is the market? What does the industry look like? All of those things. You've now worked up to become this hedge fund trader who's placing bets in different areas that are trying to be informed bets. There's actual research in this. There's actual thought, right? And there are laws governing, manipulating these things. Like I think people don't understand. Everyone thinks laws just exist and people ignore them, but the government's pretty aggressive about enforcing them.
Yes.
Just ask Martha Stewart, I guess. But then into this frame comes a whole bunch of things like Robinhood, where everyday people can trade stocks without going to a broker. Like the whole point was a broker gives you advice and you tell the broker, I like your advice, I don't like your advice, please do these things, right? Like that was a stockbroker, right? Like they were your friend, so to speak, because they would make money if you made money.
Yep.
Now there's a whole group of people where there's no broker and you can do whatever you want without advice, which I guess you could have always done, but now it's much, much easier. What's that like when you spend your time doing research, like, and then you have a million people show up to the party who don't do any research?
Yeah. Well, in the short term, it makes things, I wouldn't say more difficult, but there are more surprises in the short term. I think it depends what your investment time horizon is.
Meaning like when you want to make money.
Yes. So if I buy a stock and my plan is to hold it for 5 years, what happens with Robinhood or any of these other new platforms or frankly, anything in the short term really doesn't matter that much as long as I'm willing to hold it for 5 years. This stuff, it happens over long cycles. We can go back and think of like the year 2000 when you had somewhat of a similar situation. The circumstances were a little different, but if you're a long-term investor, this stuff really actually shouldn't matter that much to you. So on the long-term side, it really doesn't have an impact. Now, if you're a short-term trader, then it has a huge impact. And at a hedge fund, you do a little bit of both. So for positions that are more shorter term oriented, we kind of do have to take that into consideration, that there is this new group of investors that's coming into the market, and it's kind of playing like game theory with them. Okay, like these are the characteristics of the stocks that they like to invest in. So let's take that into consideration when we're making investment decisions.
So you're trying to make sense out of Reddit bro madness.
Yeah.
That might be a losing proposition. Like I don't Reddit is the cesspool of humanity. So in that vein, so that bears the question then, okay, so that's what you do. Then everybody looks at the stock market and you're placing these informed bets. So as like the expert in this, right? The person who spends their time doing it, in the same way I would ask a doctor, like, what does this look like, right?
Yeah.
What should people know about the stock market, right? Because I don't think people actually, I certainly didn't understand what stock market is. Like companies issue stock,
Yeah.
and that raises money,
Yeah.
which they use to spend on growing in theory, right?
Yeah.
So when an IPO isn't just a whole bunch of people trying to cash out,
No,
they're trying to raise capital, raise money to do more things.
right.
So in theory, if Airbnb wants to become the largest whatever, hypothetically, that was a reason for them to go public.
Yep.
And the government can sometimes force you to go public if you have a number of investors, right?
No, the government,
Or there's a regulation.
to my understanding, the government can't force you to go public.
Got it.
Yeah.
So you, in that vein, when you go public and you raise this cash, then what happens next? You issue shares,
Right.
which were paper certificates. I remember my McDonald's paper certificates. You don't get paper anymore.
No.
Although if you wanted paper, can you get paper?
I think you can request it.
So why would an everyday person invest in the stock market as opposed to putting their money in savings?
Because you can earn higher returns, presumably earn higher returns in the stock market.
So there are all kinds of ways that you can generate wealth, right? Like you can try, like as we call it, like grow the money you have.
Yeah.
You can put it in the bank. You can start a business. You can put it in a savings account. You can buy bonds, right? Like I remember we used to get savings bonds. Those were like gifts, right? Where you buy, you pay $25 and then you turn it in 7 years later or whatever, and the government gives you 50, right? So in theory, the stock market is another option where things grow faster or could grow faster.
Yes.
But there's a lot more potential downside if everything crashes.
Exactly.
So how should an everyday person think about that? Should they get in and just put it away? Like you talked about where it doesn't impact, like where Robinhood and all the short-term stuff doesn't impact because like they're just betting that like things will go up over time and the government and the country are not going to go belly up. Like if the US goes belly up, we have bigger problems.
I can't speak for how people should look at it. The way I would look at it and the way I do look at it is if I were to own this business, if I were to own this stock like it was my business, what kind of research would I perform? And then I go and perform that research.
So I think that's the key component is like owning a stock can be a bit like owning your own small business. Like if you were to make decisions, you'd have to be informed.
You own 1% of a business. That's what a stock is. That's what that is what it is.
Oh, yeah. I would have never thought about it like that. I'm like, okay, I bought stock, but I never really think about like I bought into that business.
Yeah, you're an owner of the business. Yeah.
Okay, that makes sense. That's actually very obvious by definition, and I didn't consider it. So my bad. Okay, so I'm an owner of the business, and I need to do research about this business, but I don't have to actually run the business.
Exactly.
Okay.
And if you don't want to own the business anymore, you can sell.
Whereas if I start my own storefront, selling is not the easiest thing in the world to do.
Yeah.
Okay. So where do people like do your research? You just Google things or you could just look everywhere.
There's a lot of publicly available information out there, and that's the best place to start is with public filings.
Okay.
So if a stock is publicly traded, they generally have to hold earnings calls. So every quarter, the company will release results, and you can listen to the earnings calls that this company has, and then the management team will provide an update on the business. There are quarterly filings that the company has to.
And they have to tell the truth in these things, right?
Yes, they have to tell the truth.
But I think that's an important question. I think people think that like a business can say whatever it wants if it's on the stock market, but they can't.
Yeah, they're supposed to tell the truth.
Okay. Unless you're Enron, in which case sometimes things go south.
Yep.
Okay. So they tell the truth they have like earnings calls where it's just like a phone call you can dial into.
It's a phone call you used to dial into. You can listen to it on the internet now.
Okay. Fancy.
And so what happens is the management team will usually have 20, 30 minutes of prepared remarks, and then you'll have a number of Wall Street analysts at large brokerage firms like Goldman Sachs, Morgan Stanley ask questions, and the management team has to answer.
Got it. But I think that's important because we think, and this is really where I want to get into, we think about the big world of finance, right? Like there's this whole stock market that's going up and down, and there's experts in it, and there's the perception broadly in society that this is just an elite group of people who are making arbitrary decisions that affect the rest of us. But what we're really talking about is the big scaled version of the grocery store, right? Which is a grocery store chain, right? Like you have one store, then you have 15, and then maybe a private equity firm invests in you, and then you have 60 grocery stores, and then you go public. Not that a 60 grocery store chain would go public, but you go public to raise money to make another 60 stores because now you really want to scale.
Yes.
And you have these regular calls where you have to say what's going on in the business, and people get to ask you questions about what they want to know about what's going on in the business.
Yeah.
And then there are people like you who are doing research about like what's happening in the grocery world more broadly, like how are people consuming food, like what's happening in society. Like all of this isn't some fictional, ethereal, like Wall Street greed is good, throwing money at each other, like in a room, lighting it on fire, deciding to send things one way or the other. It's actually supposed to be based in a functional reality.
Yes.
Is it ever like not? I mean, do people get emotional in the stock market?
Yes. Over the short term, I think the stock market is more about behavioral economics in the short term versus anything tied to earnings or something fundamental.
So what does that mean?
So that means and this happens actually all the time. Here's an example. A stock today trades at $100. Tomorrow we wake up and the stock trades at $80. What's the right value of the stock?
I don't know. How would I know? Well, I would do research, right?
Yeah. So I come up with my own value. We both owned it at $100.
Okay.
You come up with your own value independently. Now it's at 80. So now I have to decide, do I buy, sell, or just stay put? And you decide the same thing. But I don't know what you think it's worth, and you don't know what I think it's worth. Now multiply that by how many people trade in the stock market.
Okay. And well, this is interesting because then this is a key point. So it's a bit like I like a California style home and you like a Spanish style home and somebody else likes a colonial home. And like there are the costs of things in the home, which would be the research, right? Like the countertops cost this much and that sort of thing. But I might decide that I like the home more than you, so I'm willing to pay a little bit more.
Yes.
Or I might decide that this neighborhood isn't the neighborhood that I want to in, so I might pay a little bit less.
Yeah.
So looking at a stock, you and I are just two separate people who could have different opinions about what we think it should be based on all of the things. So, and then can people can talk to each other, but people can't plan to like do things, right? No. I think this is an important point for like people to know is like, I can say, or maybe I can't, can I say, I think the stock is worth 85 and you can say, I think the stock is worth 90. We can say that to each other, our opinion.
Yes.
But that's where the line stops. You and I can't say to each other, well, if we both buy, we can compromise at 87 and a half. Cause that's like, then that's, or can you?
So you're saying we can say what we think the stock is worth, but then we both buy and basically say we will sell at this price.
Yes.
That's
illegal.
That is not allowed.
I think that's important for people to know, is that that conspiracy, and not conspiracy theories, but it's like that collaboration is not allowed.
And frankly, if that even did happen, you still have to trust the guy who you made the deal with.
Right.
Which, if the stock keeps going up, then
right. Because there are lots of other people who are
Exactly.
doing things, which means that the two of you could have illegally decided that you wanted to do something to the stock, but there are a million other people who have independent judgments who might buy, sell, and all based on emotion.
Yeah.
So somebody could wake up one day and a CEO of a stock, a company could be perfectly fine, and the CEO could be arrested for murder, and then the stock would tank, even though it didn't have anything to do with the company's actual work.
Yes.
That would be based on emotion.
Well, unless you think the reason why the business did well was because the CEO that particular CEO ran the business.
Got it. So that makes sense. So then you have all of these inputs. How do you even begin to make sense of this? If you're an everyday person, can you?
You can. There are ways you can figure out how to do basic valuation work and to create these frameworks. I went to school to help start building these frameworks.
Well, that makes me think a little bit of, we had a guest on the show, Dr. Brewer, who is a friend of mine who is a pulmonologist. So he works in critical care. And one of the things we talked about was how people will come in and they will have gone onto WebMD to figure out what's wrong with them. And he had a very politically correct statement, which is, he said, a more informed patient is a good idea. It's just the patient also needs to understand that expertise matters. And he went to school and learned lots of things that are not on WebMD, that are not available to without training. And there's an expertise. You can't become the best basketball player of all time unless you practice. You went to school, learned these things. You've worked in this industry for a decade. So there's something to be said for you can do some things on your own, but a lot of things require expertise and thoughtfulness.
Right.
So maybe that's the overall lesson, which is that there's a level setting that, okay, this is what's actually happening, right? People are trying to make informed decisions. And then there's this situation where how you inform yourself. And then there's a level of expertise associated with this. And just understanding all of that demystifies this, right? It's not just some random number on New York.
No. Over the long run, it's not.
That's kind of comforting. It's not fake, right? It's not. So then people talk about recently if it's not fake, why do certain things happen? So let's take a concrete example. And if you can't get into this, totally fine. But then we'll edit it out later. But let's take a concrete example. The stock market kept going up during the pandemic when a lot of people were suffering. And that made a lot of people go, why? Was that purely based on emotion? If the economy is doing this and the virus is spreading, what could cause the stock market to have gone up, looking at that in retrospect?
So the stock market, for the most part, is 100% forward-looking.
Okay.
So once people got a better understanding of what the virus is, what it can do, what it can't do, even though the economic impact was not directly felt by everyone around the globe, people started to develop theories about when the economy would improve and when we would be back to normal.
Okay.
And so and I'm not saying this was my view or not, but let's say you and I have a fund, we determine in April that, hey, this is the worst it's going to get.
Okay.
And we think by July 2021, everyone's going to be vaccinated and things are going to be back to normal.
We would have been very smart in predicting the future at that point.
Exactly. But if that's what you believed at the time, then you would have been buying the market.
Got it.
So that's one driver. Another driver is, which I don't know which one's more important. Another driver, I think, is that in order to save the economy, the Federal Reserve started printing a lot of money. And they did that so that banks would then, that money effectively goes to banks, and then the banks then pump that money into the economy.
They lend it to people. They create opportunities for people to, in the middle of a recession or in the middle of a pandemic, open a second grocery store.
Right. That's the purpose of it.
Okay.
And then at the same time, there was a lot of stimulus money which was needed to help support the economy, which was direct paychecks.
Okay.
And then also PPP loans and all of that other stuff.
So all of that was meant to put more money into the economy.
Yeah, exactly. And so when there's more money getting pumped into the economy, and effectively what the Federal Reserve is doing is they're lowering interest rates, that means
making it cheaper to borrow money.
Yeah, exactly. Making it cheaper to borrow money. That means if I'm a bank and I used to earn 3% by loaning money to your business, now I'm probably going to earn like 1.5% when the Fed puts all this money into the system. Well, if let's say I'm a fund that buys bonds, when that bank lends money at 3%, those bonds I can make 5% on. But if now that bank can only make 1.5%, that means I can only make probably 3% on those bonds. Well, the 3% isn't great to me. So what do I do then? Then maybe I start buying stocks. And so the money supply starts flowing more and more into where you can make the highest returns, which is generally the stock market.
So it's a little bit like, I think when people say, oh, well, the stock market's skyrocketing, this bears no relationship to reality. In reality, there are actually lots of things, and there are lots of people investing money in a lot of different areas. And it wasn't just about the stock market. It was about all the areas where people could put their money. And the stock market ended up going up in part, who knows how much or how little, there's other things, but in part because other people said, potentially I can make more money here over in this other area.
Yes.
We keep looking at the stock market as this isolated thing, but it's not isolated. It's part of a very complex web of options, of finance, of money flowing around the globe, which all comes back down to, that decision by the Federal Reserve to lower interest rates, to put more money in, which then gives the bank money to loan a grocery store operator. All of this trickles down. It feels a little bit like the Devil Wears Prada, and like that blue scarf you picked out of the bargain bin was part of a complex long tail of decisions that started with like cerulean on the cover. In this case, it's what is the interest rate?
Yeah.
So this has been fascinating and very educational in that respect, is that like there is a basis of logic and something happening here. There's like supposed to be a reason that things are happening, but they're all part of a bigger system. Just like if your arm's broken, you can get an infection, it can spread to the rest of your body, or your arm might be broken, but your legs might be broken as well. Like there's all kinds of things happening at the same time.
Yes.
So I can see the puzzle aspect of this now. It makes me think that you had a very complex childhood.
It was pretty straightforward.
I did not have this appetite for puzzles. I was content with crayons and coloring books. So I am impressed. But I'm also grateful that you took time out to talk about how we even begin to make sense of the world, right? Like how do you even begin to think about what the stock market's doing and creating wealth? And before we even get into the moral questions of like, should we, I think we have a lot of conceptions in the world that like, oh, this is happening because people decided it here. But a lot of it is about just dispelling that myth and saying, okay, let's level set. Let's be transparent. Let's be honest about who we are, what we're doing, and what world we're walking into. And after that, we can have a conversation about what we want to do next.
Right.
Perfect. Well, thank you so much for joining.
Thanks for having me.
And thank you for tuning into this week's The World According to Craig, which is turning out to be the world according to a lot of people who are a lot smarter and understand way more about how the world works. If you want to learn more about how the world works, tune in next week, because I'm sure we'll have somebody who's explaining another concept that's completely foreign, but awesome and fascinating to me. Thanks for tuning in to The World According to Craig. I really should have thought through this podcast title thing before I used it, since it's really the world according to other people who are smarter, better, brighter, prettier, and more amazing. And that makes me happy, because I'm delighted to welcome them every week, and I hope that you'll join us for a new story every Tuesday.